everybody. Happy March 28th, 2024. It's Thursday. It's fake Friday. We don't have, the markets aren't open tomorrow, which is a strange thing. We don't have Fridays off very often. So I don't know how to act. I think my wife's got some chores for me that we're going to go shopping. So still feels like a work day to me. Anyway, this is the All-Star Options Jam session. If you're new here, this is a session where we review any action amongst trades that we have open in the All-Star Options service. We talk about whether we exited any trades, whether we took profits in any trades, if we've adjusted any trades. We also run through an update of new stop levels for existing positions. We like to trail stops in positions that are working. And then we do a quick little review of new positions that we've put on since we last spoke. And we're going to kick today's session off with a little bit of a lesson. But before we get there, I have to drop the old disclaimer. Everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something from following my process. All right, so I do have a lesson, but before we get to the lesson, let's just do a high-level overview here of the markets. S&P 500, I'm a broken record the last 3-4 weeks. We just continue following through on this breakout. I mean, it's pretty dang impressive at this point, the way the market is just kind of 45-degree angle up and to the right in the S&P 500. Is this a freight train you want to step in front of? I don't know. I know there's a lot of heroes out there trying to call a top, and they might be right, but boy, who is it? Was it Peter Lynch or somebody that said something to the effect of there's more money lost in preparing for bear markets than money that is actually lost in bear markets? Keep that in mind as you're trying to fade this market. Volatility index also showing that there's not a whole lot of worry out there right now, which, hey, if you're a contrarian, the shocks happen when people aren't worried, right? I'm not saying there's a big shock coming, but whenever we get to these low levels, it's always good to be mindful that, yeah, things are calm and steady right now, but it won't take much to get this thing ripping. I mean, this was the COVID spike here in 2020. I'm not saying we're going to do that anytime soon, but, you know, these things tend to happen out of doldrums, right? Okay, so let's start off with the lesson, and we've got the Traveler company here, Travelers companies, ticker TRV. The lesson I want to talk about here is when we get into expiration month, some of the rules change around how I exit positions. We talked a bit about it a little bit on the morning show this morning, if anybody tuned in, but the way I exit positions, and I know many of you have heard this before, but I know there's also many of you who are new here. So it's important to keep sharing best practices. So one thing that I do with my positions, and I'm afforded this luxury because most of the positions I put on are defined risk. They have defined risk. That's not always the case, of course, but I'd say 75% of my trades have defined risk. So I know the most I can lose going into the trade. And I know in the worst case scenario, if I suffer that maximum loss, it's okay. I've sized my position in a way that that loss is not going to be impairing to my portfolio in any way. Okay. That said, when I have a stop loss level, so looking at this Travelers company chart right here, you can see my stop is now 218, right? So I don't have a working stop loss order in the market for my long calls. I'm long the April 220 calls. I don't have like an order to sell my calls. I don't want to do a stop loss order for calls. You can do that. Your broker will let you do that. But if you put a market stop order to get out of trades when they break levels, you are opening yourself up to get a really bad fill. When options markets are moving, bid-ask spreads tend to widen out sometimes pretty drastically. And when you're looking for an exit and they know you're coming at them, they're going to widen those bid and asks, and you're going to get filled at the lowest possible price on the way out, which if you were a little bit patient and you worked a limit order, you probably would have gotten filled and saved yourself a bunch of money. All right, so with Travelers here, with this stop at 218, I have an alert set on my trading platform. All right, it lets me know that level has been broken. Now, when the level gets broken, And again, this is 90% of the time, 95% of the time. When the level is broken, I will not do anything that trading day. I will not exit intraday. I'm waiting for the closing price, okay? I want to see the stock close below 218. It might trade below 218 intraday and then trade up above higher. If it closes below 218, that's my signal. And then the next trading day, I will look to exit the trade, assuming the stock is still back below 218. If it gaps higher overnight, I'll stick with it a little bit longer. It's earned itself another day. And this is important, as you'll see in a trade coming up in a moment. So anyway, these next three trades that we have on the books here that we're going to talk about, these are trades that have April options. And so today is March 28th. This is the last trading day of March. So we're going to stick to the normal process. But starting next week, we are in the expiration month for these trades. And so all these trades are in the money. They're working for me. But gamma now becomes my enemy, especially if the trade is going against me. All right. So once we're in expiration month, I will be far more aggressive with my trailing stops. I will usually, and I use discretion here, but I will trail a stop somewhere around a 3 to 5 day low, the low price, the 3 to 5 day intraday low price. So if I'm looking at this TRV chart right now, you can see the last 5 trading days right in here. Looks like that low price is, I'm eyeballing it here, but say it's about 223, right? I don't have the finer details here, but I'm gonna starting next week, I'm gonna move this stop. It's at 218 now, but I'm gonna move it up right below this low. All right, and as long as TRV keeps going higher, I'm gonna keep adjusting my stop up every couple of days if I can, because I don't want to give back I don't want to give back much more in what I've got right now. Okay, this is what I do in expiration month, and then we've talked about how I'll exit the position following a closing price. Right, that's what I do 95% of the time. The exception is a trade like this when I'm approaching expiration, when we're getting within a week or two of expiration. If my stop, my aggressive trailing stop gets triggered intraday on a position like this, that is when I am more likely to exit intraday. All right, again, gamma is my enemy here. I've got open profits. I don't want to give too many back. So I'm going to be a little bit more aggressive. Might I regret that exit? Sure. But at that point, I'm just being greedy, right? So with travelers, our stop is at 218. That's for now. Starting next week, I'm going to start moving this up a lot more aggressively. The same story with Republic Services, ticker RSG. We're in April 165 calls. This position has worked wonderfully for us. We got in on November 13th, and with maybe a brief hiccup right in here in mid-December, this thing has just been a powerhouse for us. We have a weird candle here. This was an earnings announcement. Gapped higher, came all the way back down. Weird candle, but we've retraced it. We're back near the highs of that earnings reaction. Stock's working great for us. I'm moving my stop up to 183 right now. If we get out anywhere near 183, we're still sitting on a really good gain in this trade. One of our better winners of the year. But starting next week, I'm going to be more aggressively trailing the stop. So next week, this stop might get moved up to about 187, 188. We'll see. And by the way, I will update all of these stops. If you guys are in trades like this or similar trade to me, I will update all these stops in our live chat room. All Star Options subscribers have access to the live chat room, and I'm in there all day, every day, and I will update the stops, alert you guys there. Okay, and then finally, the last one we had that has April options is Lululemon. This is a bearish trade, a rare bearish trade. We put this trade on as a portfolio hedge, if nothing else, because back on January 31st, down in here, the stock was exhibiting weakness while the indexes were still making highs. So this felt like a good stock to use as a portfolio hedge against many of our long positions. And boy, remember what we were saying just a little while ago. I like to wait for the closing price and then I'll exit on the morning of the next trading day. Well, right here, it's kind of hard. You'll have to zoom in with your eyes a little bit. But on this day here, this was right before earnings last week. Or was this early last week? Right before earnings. The Lululemon announced earnings after the close. On the day leading into earnings, The stock closed above my stop loss level. This is a bearish position, right? So the stock closed above my stop level at that point. So my thinking was, all right, tomorrow morning, I'm going to be getting out of this trade, assuming it's still above my risk management level. Well, guess what? Earnings came out after the close. Stock just got destroyed. So when we opened for trading the next day, we were way below 420, which is way below my stop loss level. And so the stock lived to fight another day. And here we are. It continues lower. We're sitting in a really nice win in this bear put spread. We're long the April 420 puts and short the April 380 puts. We paid $6.50 for this spread. Well, right now this spread's worth, I don't know, 18 bucks, 17 bucks. I haven't looked, but it's well in the money and it's doing well. And so right now my stop is at 420, all right, which happens to be the same strike as my long 420 puts. Same story with the other stocks though. Next week, I'm going to get even more aggressive with this stop. I'm going to trail my stop down above the 3 to 5 day intraday high. As we get closer and closer to expiration. But one nice side note here is it's trading at 389-ish right now. 380 is our profit target. When we put this trade on back on January 31st, we laid out the whole plan in there and we said that if it gets to 380, whenever it gets to 380, we're going to take the whole spread off and book the profit, whatever that profit is. And how much that profit is will depend on how close we are to expiration. Well, the good news is we're starting to get close to expiration. So if we get down to 380, we're going to have achieved pretty close to the maximum profit in this spread. The most this spread could be worth is 40 bucks. All right, we paid $6.50 for it. So either way, Lululemon working well for us. Glad we stuck to the plan. We almost got stopped out, but this is why we wait for closing prices. And this is why we stick to the plan and we're being rewarded for it. And by the way, most of the time, yeah, I'd say most of the time, that's fair to say. Most of the time, waiting for a closing price and exiting the next day didn't really make me any money. In fact, it might have cost me a little bit of money, right? But for all those times that it cost me a little bit of money, all it takes is one of these trades, Lululemon, to make it all worth it and then some. This is why we do it, okay? All right, so for the next series of charts we've got here, these are all just existing positions we have on that don't expire in April. They have much more time, but we're raising our stops, sticking to the process, trying to lock in profits. This bull market, it feels like, I've been saying this for the last couple of weeks, but it feels like it's getting a little long in the tooth and we might be due for a pullback or a correction of some kind. And many of these long positions that we are in, many of which we're sitting in some very nice profits, they could be vulnerable in any type of market sell-off. So we want to be trailing stops, being prudent, not being too aggressive with the trailing stops, but generally speaking, most of my trailing stops, or most of my stops that I'm adjusted to, they don't always show up on these charts because my guys don't put 50-day moving averages on the charts. But oftentimes my stops will correspond with either a key level of support, an obvious level of support on the chart, and or the 50-day moving average. So keep that in mind as you're looking at some of my stops. But IBM, we're moving our stop up to 187. This has been one of our biggest trades of the year. Got into this trade on November 20th. We bought the June 170 calls, currently trading at 290. I'm sorry. Let me say that again. We bought the June 170 calls. We paid 290 for them. They are doing really well. But 187 is now our stop loss level. Any close below 187 is our reason to get out. All right, Cloudflare, ticker NET. We got into this on November 29th, right in here. It chopped around for us and just kind of was frustrating for a while, but we finally got the breakout. And when we put this trade on, the original plan was if and when Cloudflare got to $100 a share, which happened to be the strike that we bought the June 100 calls for $6. If Cloudflare got to $100 a share, we were going to sell enough of our position to take out our original risk, whether that meant selling half of the position or 2/3 of the position or 1/3 of the position. We would make that determination at the time, but whatever paid us back all of our invested capital, right? So I invested $6. So however I can get $6 back, if it got to 100, that's when I would get out. Well, We had an earnings, a very nice earnings reaction. The stock opened up around, I don't know, 115 or so, well above the 100 price that we were looking at. I sold half of my position. I locked in profits. I'm already sitting in guaranteed profits in this trade. Cloudflare could go to zero tomorrow. I'm sitting on guaranteed profits, but we still have half of the position. And so the half of the position that I have left, if we break 93, that's my signal to get out of Cloudflare. Okay, Ecolab. This is a great trade we got into on December 22nd. We're long the July 220 calls. Much like Cloudflare, just kind of chopped around for a little bit, but then we got a great earnings reaction, and the stock has been just taken off ever since. I'm now raising our stop to 220, which happens to be our call strike, the July 220 calls. But we got a lot of time for this thing to work. Nonetheless, 220 is our stop. If we see a close below 220, I will exit this trade. Wells Fargo, we have till January with these calls, January 2025, 60 strike calls. We paid $1.75 for them back on January 29th. Almost got stopped out. Another example, guys, this stock at one point on a couple of these days traded below my stop loss level intraday. I think it happened twice on two separate days. It closed below, or I'm sorry, traded below my stop loss level intraday, but the stock rallied each day and closed above that level. So no signal, all right? Yes, it traded below the stop loss level intraday, but it closed above. Therefore, no signal. It lives to fight another day. And boy, am I glad that we didn't get stopped out, because sticking to the process has rewarded us. The thing has ripped higher. It's been consolidating for the last couple of weeks. But we are now moving our stop up to 54.50, which kind of corresponds with this little tight consolidation here. The 50-day moving average is also coming into play, I believe, right around there too as well. So that's our stop in Wells Fargo, 54.50. All right, Cadence Systems, ticker CDNS. We're in a bull call spread. Got into this in late January. We're long the May 300 calls, short the May 330 calls that we paid $10.25 for. We are now moving our stop up to 303. This corresponds with a 50-day moving average as well. Any close below 303 tells me that this thing is starting to reverse on us, and I'll want to get out. And depending on a variety of factors, but we might, if we get out at 303 or just slightly below 303, we might actually still earn a profit in this trade, which would be nice. Okay, C Limited. Next up, this was a Steve Straza favorite. We got into this trade hoping for a big, at least get back up to these levels here around 85 would be great. We're in a bullish risk reversal where we shorted the June 35 puts and we got long the June 65 calls. We put the whole trade on day one for a 50-cent net credit. So worst case, not a worst case scenario, but if all of these options expire worthless, if the June 35 puts expire worthless, which they're looking like they will at this point, and if the June 65 calls expire worthless, at least we walk away with a 50-cent net credit. That's not the profit we're looking for, but it's nice to have that. But either way, the position has moved our way. It's kind of flagging a little bit now, but I've moved our stop up to 48. Any close below 48 is my signal to get out of the trade. And I'd be shocked if we didn't earn a profit at that point, because we've basically squeezed all the juice out of those June 35 puts that were short. So we'll probably almost surely walk away with a profit as long as we don't have any like crazy gap down, which, of course could happen. All right, Nucor, ticker NUE. We only have a few more, guys, so bear with me. We're long the January 230 calls. We paid $7 for them back on February 21st. The stock has kind of been frustrating, but now finally starting to show some signs of breaking out. And because of this sign of a breakout, I'm raising my stop up to 185. If this thing rolls over, I don't want to be caught in a fake out breakout. So if we get back below 185, I'll look to close this trade and move on. Next up, Amphenol, ticker APH. This is an electronics maker. We got in on February 26th. We bought the July 120 calls for $1.60 debit. Had a great earnings reaction here. Well, it opened very high following an earnings report. It kind of gave some of it back, and we'll see if it climbs back. But we're raising our stop to 108, which is just below this area of support here in early March. 108 is our new stop in Amphenol. Next up is Robinhood, bull call spread. We got into this on March 1st. We're long the September 20 calls and short the September 30 calls. We paid $1.35 for this trade, and so far it's starting to work. In fact, our long calls are finally in the money here with a 20 handle on Robinhood. So looking good. We still have a long way to go in this one, but we are raising our stop up to 17, just below this kind of messy area here earlier this month. If that area does not hold, this thing could reverse pretty hard on us. At least that's a signal that that's what the market is telling us it might want to do. So I will look to close the trade below $17. Finally, the last trade to update on is Valero. These are long calls. We got the September 175 calls, excuse me. We paid $4.50 for them back on March 4th. Boy, did we nail the timing on this thing. I mean, within a day or two, this stock really took off and started moving in our favor. So we're very happy with this trade so far. I'm moving my stop up to 154 now. 154 was a level of just above a level of previous resistance, but also corresponds with the 50-day moving average. Also corresponds with, when we gapped here, this is the low end of that gap. We don't want VLO to come in and fill that gap. That would not be a bullish signal for us. So 154 is our new stop loss level in VLO. If anyone's in this trade with us, hey, congrats. So far. Okay, that's it for all of our trades that we're making adjustments on. If you're new here again, every one of these trades that we've put on, we publish a detailed report that tells you why we like the setup, how we're trading it, what type of option strategy we're using, where our stop loss levels are, where we will exit a trade because it's not working, and if and where we will take profits. All that stuff is laid out ahead of time so that once we're in the trade, we don't need to guess about what to do next, right? We want to trade from a position of strength. And for me, trading from a position of strength means having a plan ahead of time, putting the plan together before I've got money at risk, right? Because if you trade, I can only speak for myself, but when I trade from the seat of my pants, putting on trades without putting any thought into it before I get in, then trying to make risk management decisions on the fly while the markets are moving, for me, that's usually a recipe for disaster, right? So I like to have a plan going in, and all these plans are laid out for everyone in the All-Star Options service. If you're not involved with All-Star Options, shoot us an email, info@allstarcharts.com. We'll be happy to get you hooked up. So there's that. All right, so next up, the new trades we've entered this past week since we last spoke. I'm not going to get into the nitty-gritty nuts and bolts details of these trades, but I just want you all to know that we've taken positions in Fastenal. We took a bullish position in Fastenal. No surprise. Look at this. Do you want to be short a stock with this kind of setup, with this breaking out of this big base? I certainly don't. So we are long Fastenal. We have gotten into Carvana, ticker CVNA. This thing has high short interest. We like the high short interest stocks right now for some bullish squeezes. CVNA is one of them, so we are positioned long there. And finally, the biotech ETF XBI, we put on a delta neutral trade in this one here. We think this stock or this sector or this ETF, whatever you want to call it, is kind of set up for some sloppy sideways action. JC likes to call it a hot mess. I think we're set up for that for at least for the next few weeks, which is really all we need for us to hit our profit target in this trade. But again, all these details can be found at allstarcharts.com. Head to the members section, head to the options section. You'll find all the detailed trade plans for every one of these trades. Whew. All right, folks, we got through a lot of it today. As always, if you have questions, shoot us an email, info@allstarcharts.com. If you don't follow me on Twitter already, please do. My handle is OptionsSean. Happy to engage with you there. Everybody, enjoy your long weekend. Enjoy opening day for baseball. Enjoy the Sweet 16 in basketball, or if you're into women's basketball, enjoy that. Got a lot of fun stuff going on. Hey, we got an options boot camp later today too. For those of you who signed up for that, I'm looking forward to that. We get started at 4:30 Eastern time. Shoot us an email on that if you haven't gotten information on that. info@allstarcharts.com, and you can sign up for our boot camp that's happening today, 4:30 Eastern, We're going to get into all the details, not all the details, but we're going to get into my process, how we put trades on, why we put the trades on that we do, all that stuff. All right, everybody, have a great weekend. We'll talk again next week. Take care.